His expertise and leadership have contributed significantly to ICICI Prudential's success in navigating the complexities of the financial markets. Mr. Haria is a distinguished professional holding the prestigious designation of Fellow Chartered Accountant and Certified Management Accountant.
What entrepreneurship can create in just about 3 years' time, and while we are celebrating 100 crores, I do hope I get invited for the 500 crore ceremony in the next 2 to 3 years. Thank you. To the parents, congratulations, ma'am, sir. I think what sir has done is not only creating entrepreneurship for himself, but also for his entire team, and hopefully I am able to emulate him at some point of time in my career. Thank you. 1 year, 3 year, 5 years, 7 years, some of you may be even older. But very few people actually know what a mutual fund does to generate the kind of returns that mutual funds do. So when you're investing in an equity fund, what exactly happens? So I'll take 5 minutes of time to just explain the process of what and how your NAV or your mutual fund capital appreciation happens, because it is a least understood aspect. My 18 years of journey or 19 years of journey has taught me that people actually don't know what happens in a mutual fund. Invest in a mutual fund. When you invest your hard-earned money in a mutual fund, in an equity scheme, let's say for example in a blue chip scheme, what does the fund manager do? When you're investing your money, that money comes to the fund manager for managing. The fund manager has to create a portfolio. How does the fund manager create a portfolio? The fund manager will see all the available options of 100 stocks that are there. In blue chip, there are top 100 stocks. Within the 100 stocks, there are so many sectors in India: banking, telecom, insurance, pharmaceutical, technology. Within those sectors, which are the good stocks to buy? Now, can an individual know all these 100 stocks in detail, 100 scripts, go and meet their management, know what's happening in that sector? The answer is no. So in a mutual fund setup, just to put the structure in place, there will be a chief investment officer who is normally a 20-30 year experience in managing money or looking at markets. Then there are fund managers, different fund managers with different levels of experience, and then to support them, there is a team of analysts. In my career between 2010 and 2015, I used to cover oil and gas as a research analyst. So there will be a research analyst for oil and gas, there will be a research analyst for banking, for one person to keep track of 2-3 sectors. So you'll have a dedicated research analyst. And that's how, through this structure, the fund manager gets the best of all stocks which are available as a pooled entity from all the analysts. And of course, the fund manager has their own experience also. And the fund manager will create a portfolio which will have all the sectors diversification, and also the stocks weightages are in a manner where risks get diversified. As Jimmy was mentioning, that risk is something which is less spoken about and return is spoken about more. But risk is something which the fund managers normally take into account when they are creating the portfolio. So in very simple sense, if you are giving us money, the fund manager creates the portfolio. Now the portfolio is created with different sectors and stocks. But does the fund manager create money out of thin air? Can I create money out of thin air? The answer is no, it is not magic. And that's where over the next 15 to 20 minutes, I'll try and simply cover how money is being made in India today, has been made in the last 20 years in terms of the growth of India, and it will give you a good perspective of what to expect in the future as well. And our country's GDP. Yes, GDP, correct. I love it when kids are there around. Now why am I showing you this? Because ultimately, you're in connection with this GDP, and I'll explain how. This next 5-7 minutes will basically clear all your doubts as to how money is being made for you in the mutual fund when you invest in equity. And unlike, say, investing in, let's say, real estate in Kerala, or investing your money in banks, in fixed deposits, through the equity route, you get the benefit of the growth of the entire equity stocks which are listed, which are doing businesses across sectors. So telecom, how many of us use Airtel over here? So now if you're using Airtel and you want to participate in Airtel as a stock also listed on the markets, and you can make money out of it. So all these are names which are known to you and me. Of course, Hindustan Unilever, Colgate, all of that are there. They are listed. When you go and purchase and spend your money, they are the ones who are profit. 10 years down the line, we'll sell 80 lakh cars, maybe even more. We sell more cars, more children are going to school, so more books are being sold, etc. etc. Everything is more and more, and which is what is reflected here. Why am I showing you GDP is because if more number of flyers are flying, which is the largest airline in India? Indigo. Indigo is the largest airline. It has a 65% market share. Air India plus Vistara has a slightly lesser, much lesser, around 25 odd. If you look at the growth of Indigo, you and I would have flown in Indigo a lot, and that is reflected in the stock price doing well if the company is well managed. These are not stock recommendations, but I'm just trying to say how sitting in Kerala you can take advantage of the growth of the entire country. What does this work, or how does it help? When GDP grows, corporates which are listed, I took some names, but corporates which are listed, their sales improve or revenues improve. When revenues improve, profitability naturally improves. I'll give you an example of cars, since most of us understand cars well, right? When India was selling 20 lakh cars, there was a certain level of sales that was happening. Today India is selling 40 lakh cars, there is a certain level of sales which is happening, and unlike 10 years back, we are selling bigger cars which are more expensive. So that is adding to the GDP, and that is adding to the profitability of cars a lot. And many of the car companies which are listed on the market, if you see them, they are doing exceedingly well on the markets because you and I are purchasing more and more cars. If the telecom companies, if the pharmaceutical companies, think of pharmaceutical companies. Today, no matter where we are, what we do, one thing is certain, that our medical expenses are increasing. And if our medical expenses are increasing, we are spending more and more on medicines, pharmaceuticals, healthcare. That growth over the last 20 years has been exceedingly strong. So 20 years back, if you would have participated in the pharmaceutical companies through the equity investment route, you would have made a lot of money. And next 20 years also, they will continue to grow. That's essentially the transfer of wealth, which happens through the equity investment route if you invest in, if and when you're investing in mutual fund. Platform which allows the transfer of growth of various sectors of the economy, various stocks of the economy to you through the investment which the fund manager makes on your behalf in the fund that the fund manager runs for you. The role of the fund manager is restricted to buying the stocks at the right price, in the right proportion, at the right time, and ensuring that you get a good diversified portfolio which is participating in the country's growth. That essentially is as simple as what a mutual fund does, and hence for you to participate in the growth of India as a country. If you believe that today India is 320 lakh crores, it is going to 600 lakh crores in the next 7 years. If you believe we'll consume more of everything, more cars, more flights, more restaurants, more hotels, more holidays, more highways, right? More pharmaceuticals, more hospitals, all of it will require more. That will get translated through your equity investment in the mutual fund. It is not a straight line. The majority reason why people probably do not participate in equities is that equity in India is not a culture. And I'll explain what I mean when I come to that chart. Since I have only 25 minutes, I am going quickly. This is India. Not surprising that what wealth you and I have is about 880 lakh crores. Majority of that wealth is residing in real estate, debt, gold, and only 5% is in equities. So I'm not saying debt is bad, I'm not saying gold is bad, I'm not saying real estate is bad. Each asset has a role to play in your overall portfolio. Each asset has some value to create. In debt, if you can invest in good credit opportunities which give you 12, 13, 14%, no problem. In equities, if you can choose the right